is Anthony with Market Grinders. It is Saturday, January 20th. Today we want to quickly go over support and resistance and how that's important and why it's important to understand that in options trading. I normally trade the SPY. The SPY is a index fund that has it mirrors the S&P 500, so it has some of the bigger companies in it, like your Apples, your Microsoft, your Procter & Gamble's, your Visas, your Nvidia, Tesla, Meta, MasterCard. I mean, just to name a few, and there, man, it's probably 40 or 50 different companies. So as these companies gain in value or lose in value, this ETF is gonna go up or it's gonna go down. So when you buy the SPY, you're basically buying a basket of companies. So it kind of diversifies your portfolio for you, in a sense. So, but key things that you want to be aware of when you're trading the SPY is support levels and resistance levels. So, and I've in some prior videos we've discussed support and resistance, but just a quick recap. Support is where the stock bottoms out at, right? If it drops down to a certain level and it tends to want to stop at that level and then reverse, we call that support. Resistance is the opposite of support. That means if the stock goes up to a certain level, it normally gets to a certain level and then it turns around and starts to go back down. That price at which it turns around and starts to go back down, that's called resistance. So in options trading, you have puts and you have calls. So a put is you're thinking the stock is gonna go down. A call, you're thinking the stock is gonna go up. So if I'm gonna place a trade with a put option, I want to buy at resistance. So for instance, if the SPY normally hits about 429 and then it reverses and falls back down to 360. If I'm buying a put, if I see the SPY go to 429, I'll put in my trade for a put and ride it down to hopefully to the 358, depending on how long out you bought your options. And then on the reverse, if I want to purchase a call, once I hit my support level, I'll purchase a call and ride it up close to the resistance level, and then I'll get out. One tool that you guys will need in your tool chest is some type of charting software. Charting's not hard. You want to simplify it, but it's really not hard. But to me, it's the backbone of being profitable. I'll say that, of being profitable in the stock market. So right now I have a Trading View. They have a paid version and they have a free version. I'll try to pin the link to the free version in the comment area so you guys can kind of tap in and start playing around. Trading View has a lot. It's a very powerful tool. But you want to keep it simple. Just pull up a regular line chart and kind of start, playing around with support and resistance. So going into next week, just want to kind of give you guys my thoughts on the SPY for next week. If you guys have been watching the market, last week we had a nice run up. When I look at the 5-day chart on January, actually we'll look at the beginning of the week started out rough, right? We started out SPY was around 399, around that 400, but 400 had been a level of resistance. So once it hit the 400 area, you want to say to yourself, well, normally when we get to 400, this stock pulls back or sells off. Same thing, right? So as the stock pulls back and sells off, and that's what it did. We hit around 400 on Wednesday, and then the stock sold off down to the 387 area. 387 for the last couple weeks has been acting as a level of support, meaning the stock normally didn't fall below the 387, and people came in and started buying the stock back up. So on Thursday, we hit that 387 level, this would have been a great time to purchase calls, because as you can see on Friday, the stock ran up to the 395 area. So thinking about next week, if you guys want to get involved in trading the SPY, we're at the 395 area. Last week, so resistance was around the 400. So we're getting close to that 400 area. The thing about support and resistance, it changes. At some point, resistance becomes your new support as stocks continue to climb. So going into next week, we have earnings that came out. We also had a bunch of options expiring last Friday. That was one thing that helped run the market up this Friday. So I would, take a look at the news and see what new information we have coming out next week, because it may be an opportunity for some calls riding the stock down if we hit that 400 mark. But one key that I want to keep in mind is patience. So don't try to front run the stock. And what I mean by that, don't anticipate where the stock is going to go. If the stock goes up to 400 or above 400, when it gets to a level where it wants to, you see it wanting to stop, or what we call, there's other trading patterns that you look for in a stock. One I'll talk about is a double top, meaning that the stock goes up, it pulls back a little, then it goes up again, and normally when you hit that second top, the stock plummets or sells off, right? So once you see a double top, that's a great opportunity for you to get in and purchase a call and then ride it down. But don't be greedy, ride it down. I normally look for about a 20% return on whatever I invested. I think that's that's, for me, that's a safe place to be. So and I'm happy with 20% on my money, and I'm putting less money at risk. If I stay in trying to double my money, that stock could turn around on you, and you can go from being up 500 or $1,000 to being down $2,000 or whatever you invested. So don't be greedy. Once you see your profits, take those profits and close the trade out. Once you close the trade out, one thing that I'm kind of working on, I normally trade in and out a couple times per day, but one thing that I'm working on is just taking one trade a day. Just take that one trade. If you win that one trade, book your profits, start doing your research for tomorrow. So and with that, it helps put you in a position where you're more profitable, right? So you don't want to make $500 a day and then in one trade, and then the next trade you feel like, oh, I figured this thing out. We're at the bottom, we pull back a little bit, so now I'm gonna buy this call and ride the stock back up, and then the stock continues to fall, and then you end up making 500 in your first trade and then losing 1,000 in your second trade. So now you're down 500, right? You want to avoid that. You want to book your profits and get out of there and get back to the research. You don't want to have your money tied up. This is when it comes to short-term trading. Then I'm talking day trading. I'm talking getting in and getting out within a day. Now, if you're long-term trading, your support lines and your resistance lines are a little different when you're plotting and charting those things, but the concept is still the same. Once you see those profits, get out, close the trade, and start researching on your next trade. Another key thing I want to talk about is the SPY, and why it's, in my opinion, important to master trading one stock. You don't have to trade 10,000 different stocks or 10 different companies to make money, because the goal in trading is to make money. So if you can run the same play, or if you're in the basketball or football, if you can run the same play over and over and over, and it guarantees you 5 yards, why would you run anything different until the defense figures out that, oh, we understand what you're doing now, and now we got a counter for it. So then you change your strategy. Same thing in the stock market. If getting those 20% gains, and you can do that daily, and 20%, I mean, a small account with $1,000, 20%, that's $200 that you're making every day. I think 250, 270 gets you consistently gets you at $100,000 a year, and that's with 1,000. So you just multiply that out, and do a $2,000 trade. You do a $10,000 trade. You know, that 20% now turns into $2,000 per day. You know, just that quickly. But just getting started in trading, you know, with a small account, I'll say $1,000 or less. Start with the SPY. SPY gives you the volume, meaning you have a lot of people that are interested in buying and selling that particular ETF. So you can get in and out of your trades fairly quickly, because that's the thing about options and stocks in general. When you hit the sell button, there has to be somebody on the other end that's willing to buy it. If you get some other company that doesn't have high volume, you may hit the sell button at $430 per share, and the stock drops down to $428 before anybody purchases it. So now you made less money. And then volatility. You want, when I talk about this 20%, 20% in options, that's like if the stock moves 50 cents to $1, you can make 10 to 20% on your money, just like that. And the SPY, you will get, I think just Fridays, looking at the charts for Friday, we probably had about a $12 move Friday. So we had from Thursday to Friday. So the stock was, let's go to Thursday. So the stock opened up around 389 and it closed 395. So, you know, that's more than a $10 move on your money, and 10%, a 10% gain on your 20 to 10% gain on your money is $1 move. So we moved $10. So you could have almost, you know, 10x your money right there, you know, on that one trade, just by holding it. But me personally, I wouldn't have held it that long, because, you know, in hindsight, you see where it went. But when you're in the trade, you see your money going up, you see your money going down. So I will book profits early, but definitely you can pull $500 to $600 out of the market with about, actually this is a trade that I participated in. I think I paid $1,700 for the trade. I probably pulled about $600 in profit out. And I'm fine with, you know, I won't call it a free $600, because it does take the research and it does take patience to understand it, but I'm fine with $600 per day. You know, I'm not upset with that. And then I'll get back in on Monday and we'll do it again. So, you know, and if you can continue on that trajectory, you're looking at probably $3,000 to $4,000 a week that you can make trading options with a small account, less than $2,000. So we're at the 13-minute mark. Don't want to hold you guys long. It's a beautiful day today. I know you guys want to get out, enjoy some of the sunshine. But download TradingView and leave me some comments if there's a particular stock. And you don't have to trade SPY. That's just something that I enjoy trading, because it gives me everything that I need. But if there's a particular stock that you would like for me to research, or that you're thinking about trading, just give me a comment. I'll take a look at it. We'll open it up in TradingView. And I'll tell you, you know, some of the support areas and some of the resistance areas. So if you found this video educational, entertaining, give me a like, thumbs up, subscribe, share the video, let your family and friends know about it. You know, it's January, tax times, right around the corner. W-2s are coming out. Some people may already have their tax checks. So I would tell you, man, this is a perfect time to get into the market. You know, you don't have to take your entire refund, but, you know, take $1,000 or $500, whatever you can spare I don't say lose, whatever you can spare to learn with. You know, take that and let's get into the market. So again, let me know what you guys think. Thank you for watching. Have an awesome day, and most of all, keep grinding.